Good morning. You're watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Friday. The Banco Central is hopeful that the economy will grow within target this year, despite risks posed by an Omicron-driven surge.
The health department logs another record high in new daily infections.
The DOF wants the importation of pork to continue up to the end of the year to prevent a spike in prices.
And the Treasury says the government will rely mainly on domestic borrowings and official development assistance to raise funds for its pandemic response. We begin our broadcast with the Banco Central expressing optimism that the economy is well placed to expand within target this year, despite the risks posed by the Omicron variant.
BSP Governor Ben Jokno hopes that the impact of Omicron on growth prospects will not be long-lasting. The Cabinet-Level Development Budget Coordination Committee, or DBCC, expects the economy to grow by 7 to 9% this year. This target, Jokno says, is achievable, saying it is unlikely for the Omicron variant to drag full-year growth. Jokno also says the ongoing COVID surge to stall bank lending, noting that the Philippine banks remain on solid footing on the back of strong fundamentals.
The new virus is kind of more contagious, but less virulent. And so we do not expect that to affect too much our forecast for this year of 7 to 9% growth. We are expecting that it will be maybe as the problem will be solved maybe at the latest by March. That's the first quarter of the year. So we do not expect that to be a major downer as far as the growth target is concerned.
The country registered a new record high of 34,000 new cases yesterday. Will these latest COVID-19 figures affect the new alert level classification set to be announced today?
Well, if you ask some experts and health officials, it's not yet time to raise the status to alert level 4. Mobile journalist Pam Vasquez gives us the front seat to the story.
For the second time in a week, the country logged another all-time high in cases with 34,000 infections on Thursday. Despite the soaring numbers, the Octa Research Group says cases have yet to peak.
We're hoping na by next week, makita na natin yung peak at magsimula nang bumaba. Mukhang 40,000 is more or less.
Pending that projected tipping point, the One Hospital Command Center is already seeing a staggering increase in inquiries. During the Delta surge, calls averaged 700 to 800 a day. Calls now exceed 1,000 daily, mostly for isolation facilities. But one indicator that has yet to catch up, hospital use.
Yung September of last year, yung tumaas talaga yung kaso bilang ng mga 26,000, sumabay din yung pagtaas ng hospitalization at saka sumabay din yung pagtaas ng intensive care unit utilization. Pero itong pagtaas ngayon ng itong January nito, nakita namin na hindi na parehong trajectory ng pagtaas ng bilang ng kaso. So ang bilang ng kaso natin kahapon 32,000, at saka the other day mga 28 and 33,000, nakikita natin na yung hospitalization nasa ano pa rin, nasa low risk category pa rin ng buong bansa.
In Metro Manila, hospital utilization rate has reached 60%. Still moderate risk as per Health Undersecretary Leopoldo Vega. But hospitals in San Juan, Taguig, Marikina, and Quezon City are already getting full. The treatment sources they only need to be coordinated with other hospitals in Metro Manila that have not yet reached full capacity. With this, both the Octa and DOH also see that there's no need for alert level 4 yet.
Itong alert level 3 nakakatulong talaga, no, kasi mapapansin nyo kahit nasa traffic, sa mga establishments o sa mga outdoors, nakikita mo talagang mas ano na ngayon, hindi na lumalabas ang tao, natatakot na rin, ano? Kaya medyo nag-lessen ng mobility.
Mukhang hindi na kailangan, Cheryl, kasi yun nga, lalo na kung medyo baka malapit na yung peak, At yun nga, medyo, as you said, bumababa na yung hawaan from 6 to 4. So baka hindi na kakailanganin yung alert level 4. Of course, minamonitor pa rin natin yung mga hospitals, yung hospital situation.
Meanwhile, the IATF on Wednesday placed 28 more areas under Alert Level 3 from January 14 to 31, 16 in Luzon, 7 in Visayas, and 5 in Mindanao. The agency members have also met to discuss on the next alert level classification for other areas, including NCR for the rest of January. Mobile journalist Pamela Vasquez, We Are One News.
All right, Dan, stocks ended higher yesterday as World Bank kept those GDP forecasts. Will we be ending the week in the green?
Well, not so fast, Jess. I mean, TGIF, you're right. Finally, a couple of days of optimism. Yesterday, we were up by 1.3%. And Timson said that is because of what you mentioned, the World Bank's outlook, saying also that the Philippines could go back to pre pandemic output this year, but not without many downside risks, of course. And you can see that on my terminal here, quite a slide, at least a pullback early into the trading day that's down by 0.4% in the first 10 minutes of trade. Of course, the World Bank, the projection that they kept, which is 5.9% for 2022, 5.7% for 2023, these are below the 7 to 9% and 6 to 7% growth projections, which are set by our own economic managers. But still, yesterday, you can see that uphill climb. We bucked the declines in the rest of the Asian region. And I feel that, despite the pullback today, we still are ending or at least seeing the gains in the first 14 days of the year positively. Yesterday, we were already up by 2.6% year to date. And Phil Stocks has said investors are looking to the medium and long term, and they will be buying in those that had gained from the reopening, like the banks, but also some are still very cautious on the safe side. They're still picking up the ones that might perform good in the tough restrictions. Let's take a very quick peek at our movers for the first 10 minutes of the trading day. You can see eight in the green this morning. Aboitiz going the opposite way, bucking that sell off up by 1 and 4 tenths of a percent, followed by Bloomberry and Pure Gold. But you can see a mixed bag here of losers. ICTSI down the most this morning by 2.5%.
All right, Dan, how is the peso doing though? That's on the back of those fresh GIR figures.
Okay, so a bit of an uptick here, which means a little bit of weakening. We are at 51.065, but of course, the Banco Central has said that, until 53, they're quite comfortable with this level. But you could see it weakening for at least the past year already. And we've, definitively broken above that 51 level. But you did mention those GIR figures. Our foreign exchange buffer inched up by 1.1%. We are now at a 12-month high. That's around $109 billion as of the end of December. What does this mean? This was the highest gross international reserves levels we've had since December of 2020. However, the buffer is below the target. The target was actually 111 billion dollars. So we did 109 billion dollars. So we're around $2 billion short. Another thing is that the Monetary Board has also lowered the GIR target we have for next year to 112 billion pesos. So once again, the peso weakening a touch here, and compared to last year, we are breaking above the 51 levels.
Here are the other headlines we're keeping our eyes on. The Finance Department wants to extend the expanded quota for pork imports until the end of this year. That's to prevent a repeat of last year's spike in meat prices. In an economic bulletin, Finance Undersecretary Gil Beltran said meat prices pushed inflation beyond the government's target range in 2021. That's why he believes that the government should enforce Executive Order 133 this year. Recall that EO 133, which expired at the close of 2021, raised the minimum access volume for pork imports from over 54,000 metric tons to 254,000 MT. Beltran said the country definitely needs to import pork to meet the demand and compensate for the shortfall in domestic supply. He also said it will take some time for local hog raisers to recover from the effects of the African swine fever.
Truck operators are expected to incur additional expenses as they will need to take a longer route during the closure of the southbound portion of Rojas Boulevard. The Confederation of Truckers Association of the Philippines says operators will have to use more fuel and pay bigger toll fees to take alternate routes. They also expect more delays in deliveries amid the heavier traffic. Now, to allow free flowing movement, the association's president Maria Zapata suggests all LGUs to lift the ban on cargo trucks, but MMDA Chairman Benhur Abalos notes that since last year there is no truck ban in NCR except along EDSA. Zapata also calls on traffic enforcers to be more considerate of truckers during the partial closure of Rojas Boulevard, noting the high penalties for offenses such as obstruction.
Now, Fitch Solutions sees the country's budget deficit staying far above the pre pandemic average in 2022. The think tank says the 2022 deficit would likely narrow to 7.9% of GDP from an estimated 8.3% last year. Fitch Solutions has raised the budget deficit forecast from the previous 7.8% of GDP for 2021 and 6.9% for 2022, noting that the country is still facing risks from the pandemic's threat to revenues. It also said that the Philippine government could come under some pressure to speed up fiscal consolidation plans given the sharp rise in public debt levels during the pandemic.
A survey commissioned by AirAsia shows that despite the rising COVID 19 cases, 7 out of 10 Filipinos are still keen on pushing through with their planned air travel in the next 9 months. The airline says this is an encouraging indicator for the aviation industry this year. 60% of the respondents expressed a desire to travel domestically, with Palawan, Boracay, Cebu, Siargao, and Bohol topping the list of preferred destinations. The survey also shows that should international border restrictions relax this year, 5 out of 10 Filipinos are ready to travel abroad. We await the fate of Metro Manila and the rest of the country for the next few weeks as the government is set to announce the alert level in various areas.
Cases climb to new highs even as hospital bed use remains at manageable levels. To find out how much of a setback to growth is the current surge, we have on the program Dr. Vic Abola, economist over at the University of Asia and the Pacific. Good morning, Sir Vic. Thank you for joining us.
Hi. Good morning, Danny. Yes.
Yes, sir. So, as we reported earlier, some bullishness here on the side of the BSP, still clinging to that 7 to 9% growth target amid the Omicron threat. Are you as optimistic? And by how much do you see the current wave tilting risk to the downside?
Well, of course, government will be optimistic in their projections. And uh, on the idea that things are normalizing, that's a big assumption because there are quite a number of risks that are have to be faced during this year. Um, I I'm more uh, m- I'm more somber in my projections of 6 to 7%, which is I think it's good enough to be able to for us to reach pre-pandemic levels by the fourth quarter of the year.
Mhm.
So that's pretty a pretty good performance. Uh, and if the risks are gone, maybe we'll be in the upper end of that range. But as of now, I'm more in the lower half of that range.
Mhm. Now, like what you mentioned, again, UANP and FMIC, or First Metro, still projecting growth to be at 6 to 7% this year. And you mentioned also in your note that you are at least hinging that on the growth in the BPO sector and as well as remittances. But will not OFW remittances hit some snag with the global Omicron surge?
Actually, not so much really because the beneficiary of the high oil prices are the Middle East countries, and of course the governments there are basically authoritarian, and they need to keep on spending, especially infrastructure, to keep their constituents happy and less restless. So because they've had some, I mean, tough times since the Omicron, sorry, since the COVID came in 2020.
Sir, let's talk about alert level 3 and the impending possibility that this might be even stricter in the today or in the near term. Mobility has already been down. How has the consumption habits changed? What did you see during the previous lockdowns and the agility of consumers to get back on their feet whenever, like in December we saw quite a lot of spending. How is this alert level 3 going to be different from the lockdowns that we've seen last year when it comes to consumption?
I think that people are, although there people are quite reluctant to go out still in the first quarter, as Governor Joko said, I also think that this will be basically at low levels already by the end of the first quarter. However, that there will be still some uh, resistance that will not allow, say, consumer spending to hit the expected levels that they would want. And but the e-commerce has grown quite significantly. If I may cite Google's
Mm-hmm.
study that in 2020, uh, our e-commerce was around $8 billion, and in
Okay.
2021 they estimated it to be 22 billion. That's a big jump. So yes, some may be lost uh, in physical spending, but there will be still appetite to use e-commerce.
Okay, sir, what's your view on global growth and how big of a dent will this Omicron wave be? You have not just Ben Diokno saying sana by mid-Feb to March tapos na to, 'di ba? But you also do have some analysts, especially health experts, saying this might not be as bad. Some of the EU countries are saying this should be endemic already, and trying to reopen.
Yes.
Will are you keeping your global growth forecast, and how will this affect our domestic economy?
Yeah, I think that the global forecasts are well set. The Omicron virus, given the evidence in several countries, is that it we're talking about uh, weeks, not months. That's the in terms of extent of its impact. So I keep my global outlook quite still positive, and even despite the U.S. policy rates or interest rates are going up as expected from the Fed, that's already been priced in by the markets, and job growth, for example, in the U.S. is quite robust. So despite despite Omicron, so I think we're getting there, uh, but there's still quite a number of risks to this outlook.
Mhm. Now, sir, of course, another major issue that we have to be keeping an eye on for this year would be the national elections. What risks are we seeing here, and is it going to be outcome dependent?
Uh, I'm I don't think it's well. The main risk in the election is really credibility. Are we going to really have credible elections? More than who will be elected, because it becomes acrimonious, contested here and there, that only creates a lot more of uncertainties. Um, Certainly, the civic organizations, NGOs, are looking closely over the COMELEC and have pointed out some of the flaws that they were observed during the previous elections. I mean, at least during the elections of 2019. But in terms of outcomes, I'm not very worried about the outcomes if, as, as I said, the elections are credible. The policies of either of the major ones that are uh, the major contenders, I
Mhm.
don't think they deviate very much from the current line of policy. So it really doesn't matter so much who, but about how the elections are
Okay.
conducted.
Sir, final question po before we let you go. Are you still comfortable with our twin deficits and the borrowing to debt to GDP ratio that we have? To what extent do we still have, a buffer to be able to fund possible
Yeah.
lockdowns and stimulus that we need without risking a credit rating downgrade? Or, is that not something important to you when, of course, we need the money right now?
Well, of course, the uh, debt to GDP goes up to 63% this year. I mean, sorry, in 2021. But my revised projections that it will only go up to between 65 to 67%, more tilted towards the lower end because of the growth. Even at 6% growth, that uh, you can see that the debt ratio doesn't rise as fast. And so once we achieve more growth, or let's say seven or more, then the debt problem gets less of a gets to be less of a problem because we've seen our debt levels much higher than that and still managed to grow around 6% or a little less than 6% during the time of GMA.
Okay, very interesting points there, sir. Thank you so much for joining us, Professor Vic Abola of the University of Asia
Thank
and
you.
Pacific.
Pleasure to be with you.
Thank you, sir.
Now, coming right up, the health department tweaks its testing and quarantine protocols as COVID-19 infections continue to surge.
More of that and other stories when Business World Live returns. Stay with us.
Good morning. You're still watching Business World Live. I'm Jess De Los Santos.
And I'm Dani Laurel. The health department is recalibrating protocols for quarantine testing amid the continuous spike in COVID 19 cases.
The government says testing the vulnerable population and health workers will be given priority in testing. Maricel Halili with the details.
In order to ease the strain on hospitals as cases surge to new levels, the Department of Health has calibrated its quarantine protocols for the general population. From the previous 10 days, quarantine has been trimmed to 7 days for probable mild or asymptomatic cases, as long as they are fully vaccinated. If unvaccinated or partially jabbed, quarantine period increases to 10 days. But for severe cases, patients have to undergo the full 21-day isolation regardless of vaccine status. As for asymptomatic close contacts, those fully vaccinated will only have to isolate for 5 days from the previous 7 days. For the unvaccinated and partially vaccinated, a 14-day quarantine is still required. The DOH announced earlier that the quarantine period for health workers will also be cut.
Kailangan na talaga i-update ang protocols ng COVID-19 based ito sa vaccinations natin at saka of course sa ating behavior ng Omicron kasi nakita nila yung Omicron ang incubation period nito lesser na 2 to 3 days compared dun sa nung original Wuhan virus ng COVID-19 na talagang mga mga 5 to 7 days. So definitely ito yung nakabase sa mga scientific data na ginawa rin ng international institutions.
As for testing, the health department is prioritizing the vulnerable population, including health workers, senior citizens, and persons with comorbidities. Asymptomatic close contacts outside of these groups will no longer be required to get tested.
Testing shall now be optional for community-level actions. Instead, symptoms monitoring is recommended. Should testing still be used, testing should be done at least 5 days from the day of exposure.
The new policy no longer puts premium on contact tracing, as there is already community transmission. Instead, contact tracers have been asked to monitor those under quarantine or assist vaccination efforts. For News 5, Maricel Harili, We Are One News.
Fitch Solutions says the next president would face challenging spending decisions as they would have to deal with weak revenues, a heavy debt load, and bloated pandemic expenses. In a commentary, Fitch Solutions said this was the case since the national government will run a larger fiscal deficit due in part to the Duterte administration's pandemic response and a deterioration in the fiscal position during the pandemic. The commentary said that although the economy is in need of infrastructure spending, the country also needs improvements to government services such as education and healthcare to boost its longer term growth potential. Fitch Solutions also noted that the budget this year would force spending cuts on national programs as it allots higher funds for local government units. Fitch Solutions says this could prove difficult if the next president has to balance competing demands for funding from regional governments.
And this from the Philippine Star. The Treasury Bureau says the government will rely mainly on domestic borrowing and low-cost foreign financing to raise funds for its pandemic response and other budget needs this year. National Treasurer Rosalia De Leon says foreign borrowing costs are expected to increase with the ongoing taper policy and looming rate hikes in the U.S. De Leon said the government has prepared for spikes in borrowing rates here and abroad as the U.S. Fed decided to tighten monetary policies. She added that the 4 consecutive months of easing inflation from September to December bids well for the government in its effort to borrow from local investors. As such, De Leon says the Philippine government still has room to maintain an accommodative policy.
And that's a first look into the business day this Friday, January 14, 2022. I'm Jess De Los Santos.
And I'm Dani Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.